a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Japan stocks and ETFs and whether they can continue their excellent performance in 2024 as well. So, in 2023, Japan's Nikkei was Asia's best performing stock market, up about 28%. And it continues to rise this year. Last week, it made a new 34-year high. Now, looking at the reasons for this excellent performance, last year, Warren Buffett's Berkshire Hathaway increased its stake in Japan's five largest trading houses, and we know that Buffett's endorsement means a lot. So he said that he likes these stocks, earnings yields, and dividends. Then global money managers, they now see Japan as a much attractive investment alternative or attractive investment destination after Chinese stock market's terrible performance. And in fact, Chinese individual investors are also piling into Japanese stocks now because their domestic stock market has performed so bad over the past few years. And then we have seen that the government in Japan, as well as the Tokyo Stock Exchange, they have been encouraging companies to improve corporate governance and also use their capital more efficiently. The stock exchange even said that they could potentially be delisted if they do not improve their capital more efficiently. So, as a result of that, we have seen major improvements in dividends and share buybacks. We have also seen unwinding of cross shareholdings and Japanese conglomerates. Now, despite this performance, Japanese stocks still look cheap, attractively valued. They, their price to earnings ratio is about 16 times now, compared to about 22 for the US. Then earnings and economic outlook remains positive. For example, Goldman Sachs economists expect Japan's real GDP to grow at 1.5% in 2024. That's down slightly from last year, which in last year the economy got a post-pandemic boost, and they expect Topic's earnings to grow at 8% in fiscal 2024. The Japanese government is also trying to attract semiconductor giants into the country, and we know that chips have become so important for everywhere in this world. So companies like TSMC, Taiwan Semiconductor, ASML Holding, they are investing in Japan. Samsung as well. TSMC has made some major investments in Japan, so that should also help Japanese companies, particularly electronics companies. And then Japan's central bank, the BOJ, Bank of Japan, has maintained its ultra low interest rate policy, while other central banks, developed central banks, have been raising rates aggressively. They raised rates aggressively last year, and that was the main reason why the yen plunged against the dollar. The dollar was surging, and yen fell as interest rates in Japan were ultra low. And while in inflation has picked up slightly in Japan, it remains quite low compared to other developed countries, and that is why the Bank of Japan has no incentive to raise rates anytime soon. And in fact, last week they announced that they are maintaining their ultra loose policy. So that is why the yen had picked up slightly, recovered late last year, and then it is down this year again. And the decline in the yen boosts sales and profits for Japanese exporters. And we know that Japan is an export oriented economy. And that is why currency hedged Japanese ETFs, which take out the currency part, they have done much better than unhedged Japan ETFs. Let's take a look at three ETFs. So this is the first one that I'm highlighting, DXJ by Wisdom Tree, a very popular hedged ETF, and this focuses on dividend paying Japanese exporters, and then it dividend weights those holdings. So a lot of focus on dividends and on exporters. 3.5 billion in assets. Let's go to the quote page on Zacks.com. You can read our research report articles, and using the link, you can go to external web page for this ETF and learn more. Wisdom Tree has some good research. So Japanese dividend paying companies, these are high quality companies usually with an exporter tilt and then currency hedging to remove any fluctuation in the Japanese yen. Looking at the top holdings, you will see some well known Japanese companies, Japanese exporters in particular, Toyota, Mitsubishi, Japan, Tobacco, etc., are the top holdings in this ETF. The second ETF that I'm highlighting is the cheapest currency hedged ETF, charges just 9 basis points, but no focus on exporters. It holds all large and mid cap Japanese stocks, so more plain vanilla exposure, but with currency hedging and market cap weighting scheme. This is a small ETF, 33 million in assets. So please use a limit order if you are interested in this ETF because of its low expense ratio. Again, you can go to the quote page and then on Franklin's web page for this ETF, looking at the portfolio, you will see same companies, slightly different companies because this doesn't have an exporter focus. So Toyota, Sony, Mitsubishi, Keyence, these are the top holdings in this ETF, and then it follows market cap weighting scheme. The third one that I'm highlighting is unhedged. So if you believe that the yen will recover this year, then maybe take a look at this ETF. Very popular with 10.5 billion in assets and very attractively priced at 19 basis points. So again, if you expect yen to recover, then BBJP, or if you don't want to bet on currency movements, then invest in hedged ETFs. And let's take a quick look at this JP Morgan product. So you will see holdings somewhat similar to the Franklin product. So Toyota, Sony, Mitsubishi, all Japanese companies, large and mid cap, and market cap weighting scheme. On the next slide, I have the comparative performance over the past year, past 12 months. So, the Wisdom Tree product, because of its focus on Japanese exporters, which benefited the most from the decline in yen, is the best performer. It is up almost 45% over the past year. The Franklin product is up about 36%. S&P 500 product gained S&P 500 index gained about 22%, and the unhedged product was up about 15%. This slide, I have the comparative performance year to date. So hedged ETFs continue to do well. They are up 7 to 7.5%. Again, DXJ continues to outperform, and the unhedged ETF and the S&P 500 index have delivered almost similar performance this year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and I'll see you next week.